Hello, everyone. Welcome to WeeklyWed from Business School of AI, where we meet every week to learn about the latest AI topics like generative AI, the new buzzword Agentic AI, and all things AI. We have a global audience here, and for folks who are viewing this from the US, a very happy Thanksgiving. I am your host, Ananya Sen. And today I am very excited to share a conversation I recently had with our guest, Vasundhara Chetluru. So before I dive into the conversation, I want to tell a couple of logistics. This podcast is being streamed on YouTube Live. So if you want to be in the video, please show up. Otherwise, please turn off your camera and mute your audio. Today, we do want this to be quite an informative session for you and happy to get any discussions going. So please write your questions in the Zoom chat and we will field it for you. Alternatively, you can also unmute and voice your question. And before we proceed, another piece of logistics. I wanted to announce a couple of things for Sudha from the Business School of AI. So keep an eye out for December 18th. So December 18th, there is a holiday learning plan coming up from Sudha. And they also expect an announcement about WeeklyWed Pro, a new special plan. It's a paid plan to give you more access to more actionable resources. And you can join a community, work on your projects together with fellow AI enthusiasts, and also ask follow-up questions to get some expert advice from Sudha and Yash and others from the community. So looking forward to you for that. So today, let's get back to this amazing conversation. This is about an AI-driven, hyper-personalized investment advisor platform, and we'll dive right into it. So, let me give you an introduction of our guest. So Vasundhara Chetluru, she is an accomplished startup serial founder, and currently she is the head of AI platform at a global investment management company. And her recent initiative for a startup was something called Pebble AI. So Pebble AI was a personalized investment advisor for geared towards individuals, and it heavily used AI and LLM technologies. And this got sold to a platform called Tiffin and integrated into an app called Magnify. Feel free to check it out. At your time, you could see actually the stuff in action that Vasundhara built, and you can, in fact, get some investment advice from it for yourself. Let me put the app in chat if you are curious. So apart from being an AI founder, Vasundhara is also historically a physics postdoc, and she had contributions to 376 research papers and started using data science and AI technologies then. And feel free to check out the whole conversation at if you want. I will put that link in the chat as well. But today, what I want to do is give you some highlights so that you can understand this domain. And although this will be a tip of the iceberg, you can, if you're curious about the domain and how to use the latest AI technologies in this, you would have a good context to get started. So let me also introduce myself. I am Ananya Sen, and I have been in the software technology world for over 16 years. And I have had a couple of hats. I was a long-term engineer and then recently transitioned to product management. I have worked in the fintech industry and a few others like e-commerce and uh, developer technologies. And I have a lot of passion to learn. So I'm not an expert in this personalized investment field, but I was very excited to collect the dots and learn more and bring this to all of you. So I will share my screen. Before that, let's get some fun going. So we have with us Sudha from here, Silicon Valley. She runs the Business School of AI and others. And I also see Suresh. Hi, Suresh. You're also from Silicon Valley. I know you. For others, as you join, please feel free to say hi and where you're joining from. So let's get back to the agenda. So the agenda today is to showcase some highlights from this fireside chat I had with Vasundhara. And I want, so we did discuss about the mindset of women in tech, and a notable point from there was that we all have imposter syndrome sometimes, and we need to be aware that that's not lack of confidence. And we just need to face that fear and get to learning and experimenting with it. So that was a key point. Please feel free to check the whole video. Here, I want to show some highlights about the startup journey that she had. There's a lot of good insights, strategies about the product thinking and how to use AI, go about the data part of it, all of that. There are some trends and adoption strategies that I'll show, and a hint of how responsible AI principles are being used to establish more trust for an AI-driven investment planner. So let me go to the next point. Okay. So what is AI-driven hyper-personalized investor advisor? Imagine it's a much advanced version of a human a financial advisor that you would hire, except that this would be real time, and this would automate a lot of the processes. And now, who are the target customer segments who have been adopting these? There are a lot of millennials and Gen Zs, the new generation, who already have trust in AI, but they are busy. They have enough dispensable income to um, play with these platforms and use it for their daily use, and they are financially aware. So that's the target customer. And a quick definition of for folks who might be new to this. So it's real time, and it creates a unique investment plan for you, for particular user, using your transaction data, your risk appetite, your financial goals, and um, the latest market data. So I want to show this piece about the market gap. So these are just highlights from the entire conversation. Okay. Um, um, I really want to switch to our next topic to get a little bit more flavor of your startup journey. And this one is about you did mention the inspiration that you wanted to help women, but this one is about how did you find this particular niche gap in the market? Mhm. And did you have to come across, say, an easy decision and a heart pounding decision about how how to bring this to market?
So my startup journey mainly began when a friend of mine, I used to be, just to give you a bit of a background, I did a PhD in experimental particle physics, and then I spent a lot of time doing a postdoc, close to 5 years. Post the postdoc era, I ended up in high frequency trading, which is a very natural path for physicists and mathematicians to end up in trading or finance, investments related career. And a friend of mine once approached me, and he said he was starting a startup, and that I would be a better fit in a startup rather than in a hedge fund. I like a call to action that happens quickly, and he said that is what you will find when you go into a startup. And when I joined the startup, though, even though I had joined to build an AI team there wasn't much of an AI at that time in that startup. So I ended up helping them build the software out, assemble their first version of the engineering team, etc. That gave me the confidence that I can actually do this, and I can do this at a scale. And in parallel, given my investments background and given my trading background, I have been very fascinated with how trading works and how investments work. Trading and investments are slightly different things, actually. So trading can also, to an extent, include gambling, while investments is for your future. And that's also a distinction that women observe and men do not, by the way. That's an interesting tidbit. When you say investments, men actually include trading in it, while women, they only think about securing your future, doing a good financial, making good financial choices, and etc. Anyway, that's a bit of a digression there. So I've been thinking about how women are underinvested compared to men, and at the same time, Robinhood has published a very well done and very well received study that showed that almost 3 out of 5 women do not have any kind of investment accounts outside of what their employer had provided in the form of a 401k. So that kind of triggered a thought in me, realizing that there is a gap, and there's a gap because there is no tools for the woman to actually do the investing. And I went about researching, calling a bunch of women, right? What can I do for you that will help you actually get into a bit more of an investing outside of what you have? And one of the answers that I got recently reasonably consistently across all of them is uh, I don't want to wait. First of all, I don't have the time. I don't even have the time to think about it. The only time I have is in the middle of the night when all my kids are sleeping, right? And I can start doing stuff. And Google, I can do use it, but not effectively. And this is one more conversation you and I have had too before, right, Ananya? It's a double-sided sword, if you know what I mean. So we they were like, if I could have like a reliable source of information that can help me define my next step when it comes to investing, it would be something that I'll use. And at the same time, I was also looking a lot into OpenAI and what they were doing. So putting it all together, I asked a few women if I could give you an app where you will ask a question, and based upon who you are, it'll give you an answer that is way more closer to what you need to do as a next best step. I'm not saying it will be the one, right? Would you be interested? That kind of triggered what I built for Pebble.
Okay. Okay, so that was the reason why Vasundhara started the journey of building on the startup called Pebble. And we have a question in the chat from Sudha. Is investing same as trading? So the reason Vasundhara actually mentions that trading and investment should not be confused is because often trading includes some gambling aspects, and from investments perspective, it is plainly like how we invest bonds or mutual funds or regular stocks, ETFs, and also like say bitcoins and other decentralized currencies. So yeah, it's more like financial goal based. So that was the difference. And it the flavor was for the mindset. So every human being has a different cognitive bias towards money. So there is like a whole field of behavioral finance that describes these cognitive biases, and the goals are different. The risk appetite, how we see investment risks are different, and it's every individual. And if we generalize it, then there has been research around how women think a little differently. And and I will share some stats on how um, the market the the market for female geared financial services is a huge gap still, and the opportunity there. But before that, since this has been a forum to discuss more like thoughts around AI and how it's used and how the data plays in there, I wanted to bring in a little bit of details there. So, as you can see, in the field of wealth management and investments, the market has moved through different technologies. So there used to be like this recommendations through machine learning, where also NLP was used to capture the user requests in the form of natural language. Through chatbots, there has been use of predictive analytics to forecast certain investments and market trends. And currently, we are seeing the exploration and some adoption of generative AI technologies um, to not only give the predictions, but also automate other workflows like report generation, or uh, create these hyper personalized experiences for the person. So let me give a quick flow of how what kind of data gets in. So as I mentioned, data is collected in real time often and also through surveys. So things like risk appetite and all would be for the person would be through initial surveys there for collecting the goals and risk of the goals of the person, but and also to estimate the behavioral biases of the person. But there would be market data that would be streaming in to get into the decision engine and prepare that personalized portfolio every time. And yeah, so this is a high level flow. And let me go next to the next segment where we talk about the market size. Give me a moment. That a little bit about the market size and before we jump into that topic. So, while researching for this conversation, I came across a very interesting article from Forbes published this year. And looks like, as per International Finance Corporation, this whole female geared fintech market is actually massive. It's a $31 trillion market. And it not only caters to the investment goals of women, it also allows companies to provide the financial inclusion for women that, as Vasundhara mentioned, we have been talking about for a long while. So the finding is the more interesting finding that this Forbes article showed is in although it's a $31 trillion market size, only a third of the companies are actually leveraging this gender data that they are collecting. And thus, due to this gap, they're actually losing like a $700 billion potential revenue. So there is a lot of opportunity here. And I was very glad to see that there are many women like Vasundhara who are taking initiative to build financial services for other women. And I don't have any affiliation with these a couple of examples that I'll mention, but it was very inspiring to see that this year this Forbes article showed that there is a new robo advisor app called Elvest built by Sally. I'll check. It's actually I about 10 years old. She's yeah. Oh, you know her? Yeah, I know her, and yeah, I know. I'm very familiar with Elvest actually. Amazing, amazing. Yeah, so, and similarly, there I read about this other new app called Credit Rich by Angel Rich. It was built for originally for women of color, Black American women, to improve their financial literacy and credit scores. So it's so amazing that like you and these other women, they are taking the leadership role to actually build these applications that can not only boost the financial goals of for women but also the entire economy. Big. So there is a bit of a chit chat that we had because it's exciting that there is this gap, and since a lot of the companies are not realizing that, so there are quite a few women who are already trying to build fintech services for other women. But here, since this is a forum for AI and technology discussions as well, not just the what the marketing is looking for, these customers are looking for. I also got into some of the AI trends of how these are built, and one of the uh, key decisions for while building an AI-driven platform is, first of all, what data do we need? How do we provide accuracy? And a big thing in an investment platform is how do you build trust and follow all the regulations? And as we all know, financial applications, they have to follow the regulations and compliances for each country it works in, for different types of currencies, whether it is regular currency or a decentralized. So there are all these layers, and um, and then to build the right amount of accuracy for helping the user decide now today which which financial assets do I buy or sell. There needs to be a certain technology. So we have been hearing about a couple of architectures in the LLM world, namely fine tuning and RAG, the retrieval augmented generation architectures. And looks like for um, financial applications, especially for these hyper personalized investment advisor applications, the need is quite different. There are narrow use cases where fine tuning becomes very useful if the model chosen is small enough and it is manageable resources to fine tune it, and blend it, hybrid it with RAG kind of architecture, so that there's also the streaming data for latest market data. So I wanted to show the piece where Vasundhara explains it. Again, I'm not an expert, I'm more of a learning hat here, but this was a good discussion with her as well.
Can I ask a question before we move forward? So what constitutes like the training that they do for, I wrote it down. Basically, how does like the AI system know like this is for women in finance and like investing for women versus just a general consumer without gender, you know? That's like one of my bigger questions regarding this, because we do know that women are like the biggest consumers and generally drive most of these markets. So I guess my question becomes like, how does something like an AI trained model narrow down and almost fine tune to help women, only women in that case, invest versus everyone else in the gender sphere?
Yeah, what I understood is definitely based on the data we collect.
Mm.
So it's a blend of collecting data, which is the training data for advice given to women. That would be one piece. The the design of the product would also uh, surface more of the goals that women usually want to do. So there would be product design included. And of course, there's all these other product strategies, right? To who you're marketing it to, the feedback collected, the customer segment that we use for collecting feedback and all of that. So, but then to include the cognitive bias of how women are thinking about money, I think it would be the data. And yeah, does that give an idea?
Yes, it does. You can continue. I just wanted to, you know. pointed out, because that's what I was thinking about the entire time. Like, how do they know what is best for me in terms of investing as a woman?
Right. And I think now that you asked that, I think fine-tuning a general uh, model, LLM model, which is out there, open source maybe, and built for everybody. Think fine-tuning there as well with the the historic transactions data for women. And I can imagine, and I did not build this, so this is only a guesswork. Maybe the data is sourced from financial advisors and all. So that fine tuning can also gear the LLM towards the women data, right? So that might be thing.
Thank you.
Okay, so I wanted to play a little bit about, because I was what I have researched before this conversation was the emphasis on the real-time market data is a lot when you want to provide a trustable service. And due to resource intensiveness, the need for GPU and TPUs, which becomes very expensive if you're fine-tuning a big LLM model. There is a lot of traction for the bigger companies to use RAG more. And there was quite a bit of a fresh perspective from Vasundhara that in this particular use case, how critical fine-tuning is to use a better model. And she also mentions how this might actually play out to be a better fit when agentic workflows come in as more of the mainstream. So let me play this segment. And this one's I'm not sharing. About the trends, and we're hoping to get more of your wisdom on this, maybe some recent tools you've come across, played with, and companies as well, but yours was for individuals. So in this, I just want to do a quick touch on the technology part, high level. There's a lot of data around and a lot of new pre-trained LLM models around, and they're catering to different requirements. And with the generative AI, just said all this, so I'm going to forward a little bit more.
Yeah. So I usually prefer fine tuning given I have the budget and the resources, right? But if you are a really early stage startup and you have to make a decision between hiring somebody or running a fine tune, I would of course go for hiring somebody. Fine tuning has its own advantage, and like we talked about yesterday, your friend mentioned that many of the bigger companies have actually failed in fine tuning. I'm not surprised by that too, right? But it is important to understand that that is because of lack of proper, I would say, skills. I strongly believe that eventually agentic framework is only going to be able to completely unleash its power per se, if we get the fine tuning part right? Because I mean, your ability to take a small model and actually fine tune it to do one thing and one thing only very well is what is agentic framework. So I do believe that it's very important. But having said that too, it is not required to do something simple. It is not required even for a simple RAG job, right? So a simple RAG framework can be built without any fine tuning, as long as you know how you are doing your vectorization, you know how you are indexing on top of that vectorization, because that will really make or break your application, etc. So yeah, it is You can do with it, you can do without it, but I think if you really want to add value and do something very special, at the end of the day, fine tuning is the solution.
I see. So that's actually quite interesting. I did want to ask a follow up on that. Um, so two things. One is, so you mentioned small models. So you are able to choose something with comparatively fewer parameters. So
Oh yeah, definitely.
it's faster to fine tune.
Yeah.
Uh, but how do you keep up with the constant moving market data, like when you're providing the real time financial advice? I mean, was your use case needing the latest to the microsecond kind of real time market data?
I want to make sure that we separate the two problems, right?
Okay.
Fine tuning means you take uh, take an existing model and give it some data, right? And then ask it to change some of its parameters that alters the behavior of that particular model, right? And then from then on, it behaves the way you want it to. What you're talking about is actually taking all the data and loading up into a model, right? And they're entirely different things.
Mhm.
And what you're talking about is like a sophisticated RAG where the data exists inside of the model rather than data existing outside of the model. For something like that, I wouldn't recommend fine tuning anyways. If you're dealing with data that's continuously changing, it needs to be a RAG at the end of the day, you like it or not. But you can fine tune your model to properly ask the RAG the right question, basically. That's how I'll put it.
Absolutely. Okay. Yeah. Okay. So know the particular use case, and if it needs more fine tuned, then yeah, go with the right kind of small model. That makes sense. So just another thing. So um, is there a particular type of fine tuning mechanism you had to use, or did you was the regular sufficient for you?
I think these are all like nuances on based upon the problem,
Okay.
right? I mean, you could do these things in lots of different ways. It all depends upon what is your optimal point when it comes to your budget, your time, the latency of the model at the end of the day, and what is the data that you have available to do these things, and how you validate it. So there isn't one answer for these things. And I absolutely don't think that no two people should like just copy paste their the way of doing things. That's not going to give you an optimal solution either. So
correct. It's very specific to what you're trying to build the use cases. Yeah. Okay, great. That was, let me actually, in the interest of time, move to my next question. So this one is quite different, actually. This is about the cloud. Okay. So, hello. Yeah. So, yeah. So that was about the concept of how, in this use case, to be able to provide the fine-tuned use the fine-tuned model is turns out to be more effective if there is enough budget, and then um, as I mentioned, looks like the RAG architecture does become useful for latest data. Um, so please go ahead if you're curious, learn more about it. And I don't have like a hands-on about it right now, but it definitely helps us think in the right direction and ask the right questions. So I wanted to ask to the group if you are already playing with fine tuning and RAG, and if you have had certain experiences for different use cases, please write that in. Did you find a particular level of better accuracy or ease to build with any of these different approaches? So please feel free to chat in and we can feel that to showcase it. So I will move on to the next segment. I was curious to understand how the the trust building happens because for financial applications, the user trust is critical. And there are a lot of different moving parts there. There is the cognitive biases, behavioral biases that humans have for money decisions and investment decisions. So taking that into factor, from trust aspect, we are aware that, and especially the AI savvy folks, the millennials and the Gen Zs and the Gen Alphas, they would be aware that there can be some hallucinations. And am I okay to trust this AI based recommendation and actually spend my money on this particular asset? So these aspects are there, and I wanted to get an opinion on this from Vasundhara while she was building this out. So let's hear how that worked out for her. So I'm going to go to the section and share. In the meantime, feel free to share some of your experiences with playing with fine tuning and RAG for your use case. Please mention the use case you used it for.
I think that's the same question I'm having is like, what would make someone feel confident to use the algorithm to invest based on that, right? But then again, you think about like quant trading hedge funds, that's what they do, right? There are algorithms that they're using to trade. Granted, most of them are written by people, but I think as we move towards more AI space, it's inevitable that like there will be one standard algorithm that maybe they've tested a bunch of use cases against and they've seen that it works, so they, will recommend it. But I wonder how, even if a firm like a hedge fund or an investment firm recommends an algorithm, I wonder how many people, at least right now within the generation that can invest, will want to. Maybe in the future, like Gen Z and everyone that comes after, I can see them being more open to it because AI has been a part of their lives from the inception of it to like them now being in the working world. But I know for me, like as a millennial, I don't know if I'd be so open to just using AI as my investment advice. I still want to hear it from a person. Um, I would want to hear at least that this has worked for them and that's why it can work for me versus like just putting my trust into something. Because if it does fail, that's where, who do we blame, right? And that's where if something fails, especially in terms of your personal investments, you're immediately going to go like, well, who's at fault, right? And so I think it's harder to blame an algorithm that's written by AI, and that's where I don't know, that's where I can see the hesitation.
Yeah, you are actually very right. And using the responsible AI kind of principles correctly to get this trust and the accurate amount of testing. And also, there is this huge part of regulatory compliances that is critical. And while I was researching for this conversation, as you mentioned, human oversight is actually a big part of the strategy. So, at some points, including human advisors into the process so that the AI generated recommendations are actually, okayed as as the right one, but it depends, right? If these are smaller asset exchanges, then that may not be the most efficient use of resources. But if it's like a big recommendation for, so it
Yeah,
depends.
I think it depends on the dollar amount, right? Like how much am I willing to lose based on an algorithm that is either recommended by a person or AI?
Yeah, there is dollar amount, and I also read that there would also be ethical considerations. So yeah, it is as you mentioned, the human oversight in these AI-driven workflows, and then it will become more effective, I think, in the agentic workflows where more of the things are actually automated. The human oversight will definitely come in. And currently, uh, as you would hear Vasundhara mention, that there are definitely tools that and frameworks in explainable AI aspects where some of those why was this decision made kind of tidbits are added. It's a
Right.
blend of explainable AI and designing the user experience so that those are surfaced at the right time for the user to build that trust. And you're right, it won't happen automatically. I myself,
It's like I can't imagine asking my boomer family members to trust an AI tool to invest, but I can see younger millennials or even Gen Z, I can see everyone after, getting used to it.
yeah, and then investment principles, I guess it's always there, right? Like start with a small budget and maybe
Right.
use some paper to make a plan and then try it for say a month and see if it's working because it's also there is adaptive learning going on. So one
Mm.
thing I read is there is adaptive learning uh, uh, built in to the application. So as your um, selections change, so it's a recommendation, right? It's not like a robo advisor where the investment is automatically getting made for you by the AI. It's more like it gives you the recommendation that based on your risk appetite, your historical transactions, and today's market data, looks like this will be the best next investment strategy for you. So it's more of a recommendation. This one is the breed of, I mean, there are different types. There are these robo advisors which will do it for you, but this one is an advisor. So you still are in the driving seat to make that choice. Yes, go ahead. And these decisions are actually now taken back into the adaptive learning mechanism to retrain the model to next time give a recommendation that which is more aligned to like my preferences. Um, so that part is definitely there. The can I place some because when experts talk, they put different nuances. I'm more with the learning hat and product mindset to think through some of these, but I really want our audience to hear it from the expert. And we have little time left, so let me see what I can get here. When it comes to make and
So I think again, look, LLMs hallucinate. We know that, right? There is no doubt about it. Um, bias.
So the since we talked about it, and then I just want to bring us back to the context of this question. This was about building the trust and the different aspects that go into it.
Have been there even before large language models, right? And the most interesting example, the example that I quote the most too, is the whole Goldman Sachs debacle, where when Goldman Sachs worked with Apple um, uh, to publish first Apple's credit card, what they did was they had a bad data science agent in there that.
Wait, I'm going to forward a little bit. Feel free to go back to the full chat. There is a bit of a historical story where the biases are there, and even these traditional applications can give different recommendations.
Right? The data garbage in, garbage out. You've heard it many, many times. It's true. Biases have been there. And I think biases by humans are a lot more involved and harder to work with and fix than biases a machine produces. If you are systematic enough, biases by machines can actually be sought out and fixed eventually. Right? The data garbage in, garbage out. You've heard it many, many times. It's true for LLMs. It's true for any kind of machine learning stuff too. So, understanding hallucination, starting with the fact that hallucination does actually exist is very important, right? And on the top of it, building various techniques. I'm sure you can read up a lot about these things on how to make sure that you get ahead of it using an LLM to actually get ahead of another LLM when it comes to hallucinations, etc. All of those things can be done. But what's more important is in the particular domain of hyper-personalization, in the financial advice, like you mentioned, trust is the most important thing. And you can only build trust if you're rigorous with what you're trying to do and making sure that you deliver what the end user wants in the right way. So LLMs haven't actually introduced this problem, right? But LLMs have made sure that people think about these problems a lot in a much more of what do you call a higher dimensional way than it used to be. So it's not going to go away, but I don't think we should take that as the starting point of what do you call, oh my God, I don't have trust in LLMs anymore. I'm not going to build anything. That is the last thing that we do. And I also find this very healthy, actually, having this conversation at this point. I don't know how many of you were around for the big data revolution that has been happening for the past 10, 15 years. People were surprised when they found that the data has biases, right? And it came as an afterthought. And I remember being in a hedge fund at that time, and then SEC was like sending out this big letter saying, "Oh, you guys are doing this. You cannot use this. You cannot do that, etc." So compared to that, what I'm seeing this time around with LLMs is all these government agencies are actually sending out surveys, asking for feedback and asking for it in the right ways instead of being an offensive, what do you call, approach. They are actually being friendly in the sense that we do know that you are going to have hallucinations. So explain to us how you are dealing with it. Right? That's the healthier attitude that I've seen. So that's in general. But yeah, when it comes to direct to consumer, this is a different ball game. We really have to be extremely careful and monitor each and everything that we are going to give to the end user.
Yeah, that. Okay. So that was about the mindset for handling the biases and hallucination aspect. So remember, being the product person in and she was the chief product officer for the for her startup as well. So being the product person, it's a lot about the strategy uh, and asking the right technology questions and partner with the technology leaders to build it out. So here, as we heard that the biases can get mitigated, and just need to test it, and then all the regulation interactions with the regulatory organizations are very critical. So next, I know we are almost at time. I did want to quickly show the Vasundhara's approach on explainable AI. And we could get only a small segment of it. And my question to the audience is, if you were to use an application like this, an AI driven investment advisor that, say, in the morning you log in and you just want to make some quick decisions, what level uh, of details or would you want to know? Would you want to know what market data it used? Would you want to know if it used one of your some of your previous uh, transaction as a way to base off this recommendation? What would give you comfort to use this application more regularly? So while you're thinking that and maybe chatting that in, I'll play the segment about explainable AI and how it's used in an application like this for personalized investment advising. Give me a moment to find the point. You have touched about on the trust factor for these hyper really mature enough to do this transparency to the user. Look, I think it's too early in the market to actually have like tools that are really mature enough to do this. But what has happened though is quite a few folks are building the proper frameworks for it and talking about what is the framework with which we should solve this problem. And like I said, they whatever we have learned with the whole big data revolution has actually become an input into this process and accelerating the thought process compared to what happened 10 or 15 years ago. So I mean, frameworks, yes, we need to really talk about how we are transparent, how we are auditable, and there are a few other dimensions with which you can measure these things, and then, or rather, not measure, track them, right? So that your responsible AI or explainable AI more or less overlap a lot when it comes to execution. And exist. But if you are a budding, what do you call, entrepreneur, or even if you're in a enterprise per se, I would recommend that start making this a part of your process from day one, like I mentioned before, because once you've deployed your model, it's very hard for you to go back and undo a few things. Mm. That's so true. Yeah. So here, stop sharing, and I really wanted to hone in on this one topic that Vasundhara mentioned a couple of times. What we plan for from day one. So, when we are thinking about building a startup with AI, we are all excited about picking the right model out there, maybe a popular LLM open source model. We are excited about and aware about collecting the right data for the use case, but we often forget these aspects, the regulatory aspects, and also these responsible AI aspects. How do we include explanations and how do we include the ethical aspects? So one big advice from Vasundhara was to keep these plans, the regulations and the responsible AI ethical aspects from the very beginning. And in a startup journey, often it's a chase between the funding available and time to market, right? So POCs would be made to get feedback from the target customer segments. And these POCs should at least show that other than the base feature that the AI and the rest of the technology is catering, uh, there are solid plans, provable solid plans to address both the ethical aspects and the regulatory aspects. And of course, the privacy concerns as well that users are now very aware of. So yeah, that was a big takeaway for me, plan ahead, and also in this use case, fine tuning turns out to be a much more critical strategy. So we are actually almost 10 minutes over, and we have only so much time for this today. Um, and with that, I would close this session, and a couple of takeaway messages is, if you're curious about how these AI-driven real-time personalized investment platforms work, there is a wealth of resources, just like I researched for it. And when we have the right notion, we can go play with the right kind of tools. And again, for this particular use case, also keep an eye out for what are these trust building aspects that we have to weave in early. So thank you so much for listening in, and hope you learned something valuable that you can apply either in your day-to-day life, in your investment adventures, or in your professional life. And thank you so much. So see you all next week. And yeah, please, you can give a try on yeah, you could try out Vasundhara's application that she had built after. So it was originally called Pebble AI, and after acquisition, it got integrated into a bigger application called Magnify. So you can find magnify.com online. They also have an app. But yeah, even I'm curious to go try it out and see. Oh, because I'm more of an E-Trade person, and this actually gives me personalized recommendations. So I'm curious to go try it out as well, other than my technology hat of learning how it's built. So thank you so much. And
Thank you, Ananya.
goodbye from the team. And just to reiterate on the announcements at the beginning, uh, look out for the session on December 18th. There is an exciting new holiday learning plan so that you can make the best of your break. And also, Sudha will be announcing a new WeeklyWed Pro paid plan to get more resources and community engagement. So look, keep an eye out for those. Thank you. We'll say bye from the team here.